Hi, this is Randy Finney with Right Side of the Chart. This is a closing market wrap from Monday, August 29th, 2022. Upon further review of the charts, I realized I need to get an update after the close today. I'm going to share my thoughts. There is, wow, just a lot in the charts. Some, we'll call it contradicting um, technicals, but certainly key levels and developments worth noting. That would be the way I would phrase it. All right, so I won't spend very long covering these charts. We're going to look at the Nasdaq 100, maybe the S&P, but mainly the Nasdaq 100 and the top sectors, all 11 sectors in the S&P 500. I think these are very significant levels worth watching, and so one reason I wanted to do the video, I said this morning, covered all my shorts, went into longs, and plan to add to those longs if the evidence suggests, or even on the upside, either on strength or weakness. That's one of the replies I made in one of the comments this morning. Weakness being that move down to the trend line. Remember, we hadn't yet hit, although we hit it on QQQ, we have not yet hit the uptrend line on the Nasdaq 100 futures. I know this is a busy chart, but this is the primary trend line I have there. I have an alternative line right there as well that comes in. And then I mentioned those flags this morning and said, didn't think they'd play out. But, well, two things of that. Number one, we are in a bear market. At least that's my ongoing theory. It has been for a while. The media has been, pulled out the cheerleaders lately with the pom-poms telling you the Nasdaq's in a bull market, blah, blah, blah. It's just ridiculous. We call it what you want. Again, I don't know. I don't use that old antiquated 20% move. Nasdaq's still well off the highs. So call it what you want. Again, it's semantics. Whether you want to call it a bear market, I'm sorry, a bull market or a bear market rally, that's up to you. To me, it's been a bear market rally. Now, with that being said, because we're in a bear market, you have to respect bear flags. This morning I was, not dismissive of them. I recognized them and told you I thought they might not play out. However, when I look at the 11 sectors, and I haven't seen this since I can remember, I look at almost all, not all, but almost all 11 sectors in the S&P 500, and they have comparable flags. And again, if we're in a bear market, you need to respect those bear flags. So we're still above where we were this morning when I reversed, and I may flip back. I cannot remember. It's been years, if not decades, where I used to get married to a position and was adamant it must do this or that, and would just ignore stops and let a loss. I flip back. Doesn't bother me one bit if I have to flip back for a loss. So where we're at, this is the potential flag that I covered here. Let me pull it in tighter so you can see it in the video. Again, Nasdaq 100 futures. It's a little bit sloppy on the futures, but what you do have is a very clean, impulsive move down, indicative of a flagpole, and then the nature of a bear flag continuation pattern. It is a continuation pattern. Is you have the a little relief rally, and typically that's on. You want to typically see that on declining volume. A lot of that occurred in the overnight session, the Globex session. These big bulges here in volume are the regular session, so it was a little bit softer than what we saw in the selling, not by too much. And again, I'm going to get to it on the S&P 500, but if it does play out, then what you're looking at here, let me pull it back out a little bit. That would be your measured target. You take the flagpole, and all you do is just take a trend line, draw a trend line from the high to the low, the full length of the flagpole, and add it to the very highest point of the flag, and that's going to bring you. I already had this level here, and it comes in very close to that 11,863. So again, as I said, certainly a possibility. I said, the next big support is that uptrend line, which is only about 2% above or below where we were, at least this morning. So what you want to watch for is, and it probably will come overnight if we get it. If we get it. I'm still coin toss. Right now, like I said, I may pivot back this evening. Tonight I'm going to be watching the futures like a hawk. I usually shut down and that's it. But right now, with things moving pretty fast, it's going to be worth keeping an eye on this evening until tonight. And that would be it. So a solid break there, especially if you take out the lows. You want to see an impulsive. And it could be a little bear trap. It could be a big bear trap, because I'm going to show you why in a second here. But you have you still have divergence here on the RSI. You have equal lows in the RSI versus much lower lows in price. So that's that. You don't have the PPO divergence yet. You might if you can get another thrust down. But let me move on to the ETFs and the sector ETFs in QQQ. Let me look at a clean board of QQQ. Just let's study that flag, right? All right, so here I'm going to zoom in. You can see it as clear as day. This, all you do, again, take a trend line, draw from top to bottom, and I move it over. There's the highest point, so I'm just going to move it to the right so we can see. And what I did is I put a line at the measured target. Again, I'm not, but you'd be surprised how often these things play out very close to their measured targets. Been trading for years, bull and bear flags, and quite often they do come in very close. That'd be 289.50, and that would be a drop of from today's highs. Remember, to match the flagpole, about 5, almost 6%. And now, so here's what we have. This was today, Friday's action. There was that little bounce today, took us back to about break even, and then in the end of the day we saw some selling. And one of the conditions among the others that I mentioned in a bear flag continuation pattern, you want to see an impulsive break on expanded volume coming out. Now look, you're always going to get a volume surge into the close, but it doesn't matter because it fits, the volume pop and the breakdown. So that's that, and that's where it could take us, which is beyond that 2% drop that I was talking about if this plays out. That's what it looks like here. When I put my lines back on, there's the primary uptrend line right there, which again, that's where I pivoted this morning, covering shorts and reversing, and now we're almost back down to it again after a little bit of a bounce, which was that flag. Now, here's the thing. When I'm talking about if you want to call it conflicting evidence or what, these are developments. There is positive divergence in this on the 60-minute chart. You know me, it's these 60-minute divergent highs and lows that usually set up the next tradable trend. You can see them all along here. This was a divergent high. You got a nice tradable correction, divergent high, big divergent low here when we pivoted long. So need to respect that. And so if this level holds, even if it, or especially on a false breakout, in other words, we break down, futures start going down tonight, but then all of a sudden they come in and buy it and they foil it. Foil it would mean if we get a breakdown and we get back above the flag. Right now, the flag, although it's broken down, we haven't taken out the low part of it. So this can go either way. And again, I'm just going to tell you what I'm seeing here. You have the Nasdaq 100 still at support. This was from way back here all along my primary initial swing target. Again, initial final target is what I keep calling it because I expected a tradable bounce off there, and I am still leaning in still as of now, right now as I do this video, still positioned that way. But I may flip over because if we break it, well, we've taken out the trend line, we've clearly broken out of the flag. Futures will stop trading for an hour or so and then pick back up tonight. So I'll certainly watch those. So as I like to say, support is support until and unless broken. So where normally I might jump the gun and or take the pivot out of those longs into shorts on a breakdown of the flag, I'm going to give it a little bit more room, but I'm not going to give it that much room. In fact, I don't even want to give it as much room down to that 296.35 level because that would be halfway down through the flag. Positive divergence, and don't underestimate how high that could carry the market. We could get another rally. It does not change my longer term outlook at all. In fact, it's only what I call potential divergence. Potential because the PPO hasn't even made a bullish crossover yet. So effectively, in my book, it hasn't put in a higher low. It is trading above that previous trough right there, but it's still pointing lower. And so if this flag plays out, then guess what happens? We never get the bullish cross, therefore we never put in a higher low, and the divergence is negated or taken out. But as of now, it's there. And if you are aggressively short now, you need to respect that. You need to watch this. You want to watch to see if these flags are foiled, whether we go down a little more or don't go down at all. and that support holds. If so, we could be looking at a rally. Again, I told you we'll kind of let's see what happens the next day or two, and then I'll start laying out some upside targets. But I put a minimum target here, by the way, since the last video, 313 and a quarter right there. It's the bottom of this right there, that pullback right there. Okay, now we're going to go through the 11 sectors of the S&P 500. We'll look at SPY first because that is the S&P 500 tracking ETF. There's your positive divergence again. Need to respect that. At least I do. There's also the bear flag. Need to respect that. I do as well. Right now, I had to, don't always have to pick a side. You can be flat. If you're unsure what to do, I always say go to cash, sit and watch. Or whether you're long or short, if you are engaged right now, just don't get married to anyone because this can go either way. I know I keep saying the same thing, but that's what I'm looking at. If that flag plays out, there's your measure target. Flagpole to the lowest part, to the highest part of the flag right there, and that would give us a move down to about 387.50 on SPY. Again, if the measured target were to be hit. And that's going to do some pretty ugly damage to the charts as well. All right, 11 sectors, and we'll wrap it up. I'm going to go in order, descending order of market cap, meaning this one, first one is the tech sector, and that is by far the largest. Last check, it was a little over 25% or 1/4 of weighting in the S&P 500 out of all 11 sectors. This one, by far has the biggest impact. And you can see the divergent high, and this is where everyone was giddy, thinking all the media was cheerleading the new bull market in the Nasdaq, that silliness, and everybody thought the Fed was going to. I don't know what they thought, really. I know what they thought, but obviously they got a reality check when Powell spoke at Jackson Hole. Big old gap right there is what I'm highlighting. But here, zoom in, and that's it. Simple stuff, right? Clean bear flag, impulsive move, textbook, bear flag pattern. It doesn't really, if you Google search bear flag, it doesn't get any better than that as far as the symmetry, the nature, the high volume. You can see the diminished volume on the flag right here. See a little abatement in volume right there with the higher volume on the move down. And now breakdown on a big volume spike, which again came at the end of the day. There's your breakdown, those two candles. And there's your measured target, comes in at about 131 right there. Which also lines up with some support. You have a reaction low right here to the left of it. So again, that is certainly a possibility. And right here, this I'll color it up yellow. There's your primary uptrend line. So it's unusual to see this disparity between QQQ and XLK. Usually XLK and QQQ mirror each other almost perfectly because the tech sector is better than 50% of the Nasdaq 100. In this case, you've got a little ways to go to the trend line. So I just wanted to point out because that could come in as support in case these flags break down but don't play out to the measured target. So there's one, and again, the most important sector. So we're going to watch this. Tomorrow, if we keep going down, then if they take it down here, it's going to build to that breakdown, and it's also going to take out the trend line in QQQ that we're on. XLV is the healthcare sector. Same thing. Textbook bear flag continuation pattern. These weren't here this morning. We started to form it as I showed you in the futures is when I talked about it this morning, but it was not here. All this that happened today, that was today's bounce, and then you can see the impulsive breakdown. So that's why I'm doing this video after the close. There's your measured target down there. Should that play out, and again, respect it. But as you can see on some of these charts that I'm covering, not all, but some, like XLF, XLK, potential divergences. Potential, you look really close, you can see the PPO looks like it was starting to curl up, little last minute jog on that sell off to the close, but we could still cross. And then you're going to have the first divergent low here on the 60-minute chart of XLF since, a lot of my lines have been cleared off, but since probably back there was one right there, and these were bear market rallies. That was one right there. There was a divergent low right there. Actually, all this right here, that's how we would look at it, right into the July lows, and that was good for that. I kind of flattened out the chart. That last 60-minute divergent low was good for a rally of about 19%, closer to 19%. So that's why I wanted to point it out. It's potential, unconfirmed. And you can see if I put a line there, which I'll do right now, that's nice, with resistance back here, resistance gap, support, support, and that takes you right to that measured target, 32.25. So you're starting to get the drift. If these things play out, that's probably how much lower we're going to go. And the one thing about it, if it does play out that way, another characteristic of a bear flag continuation pattern is the move out of the pattern is usually mirrors, is very similar to the flagpole. In other words, it's just as impulsive, and that's why you can put these arrows. You don't zigzag like this down. Is it possible? Sure, anything's possible, but usually these things play out in that fashion with an impulsive break and an equally impulsive move and about roughly equal distance to the flagpole there. And that you can see it lines up with a lot of like pretty good support levels. It could still keep the, and then get a nice rally from there. XLF, next up is XLC. This is the communication sector. Think Amazon and Facebook or Meta. And you have nice clean. There's that uptrend line off the low. So here's another one where you close right at support, just like QQQ, right on the primary uptrend line. You hit it today. So that is, in a sense, bullish. Now, just because you hit a trend line isn't per se bullish, but what I like to say, support is support until unless broken. So there's potential to bounce off there. If you bounce, then that's bullish. But you also have, like some of these other sectors, nice potential. Again, only potential. Need to curl up and make a bullish crossover, but positive divergence right there, right? Now, should it play out and that trend line get taken out, because you do, again, another sector with a textbook bear flag pattern, impulsive break, right before the close, and there's your measured target down there to 52.74. And what you can do, replicate these on your own, take the average drops. If you want to know what the Nasdaq 100 is going to do, just measure the flag of the QQQ. That's going to give you the measured target there. Some sectors have a lower beta. This one's about the same because it's like I said, Facebook and Alphabet, I believe, are the big when I say that because they're the primary two components of this sector. XLY, consumer discretionary. You can see this one's well above its uptrend line off the mid-June lows, unlike other sectors. But you do have that same textbook bear flag, and you had a breakout right before on the final candle of the day as well. The measured target's going to take you down to around that uptrend line as well. And so one more thing about that, if these happen to play out, we'll know tomorrow. If anything, if they're going to play out, I would put very high odds, 90+%. They're going to start in the form of a gap because the futures would need to go down tonight, and then so I can give you an update in the morning if they do play out. But that would be the next level where if I pivot back short again, I'll be looking to close those shorts and pivot long when these flags play out, especially as a lot of these run into. What I do is when I take a bear flag or bull flag pattern, I first put the measure target, then I look what's the closest very good support or resistance level nearby, and that's usually what I'll target. In other words, if I had a very strong price support a little bit above the measure target, that's where I'd cover and reverse. In this case, that one would probably go out a little bit longer. And, these support levels are like, they're kind of like magnets or black holes. You get close enough, and there's like a gravitational force that just kind of pulls you to those levels. All right, so a couple more. XLI. Yes, it was getting repetitive, but that's why I'm doing the video, because I cannot recall so many, and again, not just nice or, I'm not trying to force these. These are textbook bear flag patterns. And there's the breakout candle, the one before the final one of the day. There's the final candle of the day. There's your measured target. And look where that comes in, right about, see that resistance we had right there before the breakout. There was your breakout. You had a little trading range there, and it would take you right down to that. So a lot of these flags, and again, that's pretty common. They align pretty well with some support levels down below, and they're either all going to play out or none will play out. That's most likely how it's going to be. See, because it's not mere coincidence. You've got so many. It is unusual to see almost all of the 11 sectors have such perfect and almost identical moves down, identical technicals and flags. What that is, just if you're wondering why it's like that, Powell's comments, for whatever reason, again, the sheeple were drinking the Kool-Aid, and the institutions were as well. This is what is referred to as program or broad-based selling, when everyone just panics and pull the plug on their 401k and they dump their S&P 500 index fund and SPY and QQQ, all these, just about everything's indexed nowadays, and so then everything gets sold down proportionally. Anything that's indexed, the only stocks that are doing their own thing are those that aren't in the S&P 500 or Nasdaq 100 or Russell 2000. So that's why you have these nearly mirror patterns since Powell's comments on Friday, because these are the sectors that make up the S&P 500. So there it is. A few more, and then XLP again. Boom, boom. There's a breakdown candle, 72.19, your measured target. XLE march into its own drumbeat. See, this is what is giving Powell just a tough time and not letting him go and follow his easy nature. Easy money Powell is that the inflation trade is just not abating, and what they did Friday, by the way. I'm just going to digress for 1 second. Is a textbook Fed move. He came in hard and strong, very short. He didn't get any wordy. He just made it very clear to all, don't be mistaken. I'm going to keep on this. We're going to continue to raise rates. Inflation's under control. It's rhetoric. It's jawboning. If Powell was serious about this, right now we have, what is the Fed funds rate? 2.25, 2.25, 2.5, or something like that. And we have inflation running. I'm going to be conservative. Conservative, real numbers, 8% annual rate. So he is still, the federal funds rate is still extremely, and again, let me repeat it, extremely accommodative. If he was serious about, fighting inflation, he would come in with an intra-meeting cut. He'd come in with the big guns. He's not going to beat inflation by jawboning it down, and that's what he's trying to do. He's trying to engineer that soft landing, and by coming out and jawboning the markets like he did, again, it's rhetoric saying he's going to be tough on inflation. He didn't do anything else. He's had a couple rate hikes, but again, come in with an intermediate cut. Show you're serious. Come in with a half or 1% hike, or just bring that Fed funds rate up to where it needs to be to really slow things down. But no, he hasn't done that. So that's why we're playing this game, and that's why you're going to see these bear market rallies. And this is not going to be like yesteryears or the last couple bear markets. That's one thing I'm trading with and incorporating into my trading is what's going on with consumer sentiment, what's going on with the Fed. He's still behind the curve, and you can see it with energy, crude oil, wheat, corn, soybean, everything else starting to move back up again. And so yeah, we're gonna go back and forth as he goes from talking tough and raising here and there, and the market will react. But right now, you can see energy is still strong. Now look, there's some divergences. We triggered the initial short on natural gas today, waiting for the secondary. Crude's been strong, the chart's strong. I'm not interested as of yet. I have some levels. I'll cover it in another video to short crude soon, but the charts were coming off a big divergent low. Just like, XLE is going to mirror crude. There's your big divergent low we came off of. We're starting to diverge. There'll be a short coming up soon. But again, this sector is the only one that's really marching to its own drumbeat lately in the S&P 500 out of the 11 sector, or more so, I should say, than the others. And by the way, as I go down the line here, we're on number, what is this, 8. And so it's not as important to the S&P 500. It doesn't carry the same weighting. Then you get to utilities, and they're even doing their own thing. And again, they're not moving the needles. Utility sector, last time I checked, it was only a 3.5% weighting in the S&P 500. Looking toppy to me, but you did just put in a divergent low here on the 60-minute chart. And then XLRE. That one does have a textbook flag. There's your flagpole, just like the indexes. There's your bear flag pattern. There's your impulsive breakdown. But on the flip side, you broke down and it took the XLRE, the REIT sector, right to their primary uptrend line off the mid-July or mid-June lows right there. So you have support, and then even if that support level goes, you have a really good support level just below at 42.19. So that's when this one, I don't think that flag's going to play out. It's got a mountain of support, big support levels below. Anything's possible. If it does, there's your measured target. But even if we break down, I think that one would be a truncated drop there. Maybe about halfway, hit one or two of these support levels, and then rally right there. This is a defensive sector, remember. Well, depends. Some REITs are defensive and some are cyclical. XLB, basic materials. There's your flag, perfect textbook bear flag, textbook breakdown today on the final candle, and that's that. Oh, and 60-minute divergence there. So, like I said, I wanted to cover all this. Can't guarantee which way what's going to play out. If these bear flags play out, by the way, guys, if if these flags play out to their measured target, if they play all the way out, they will most likely then take out these divergences, and that's going to be pretty ugly. And that's also a trait in a bear market. You can get these divergent lows. They look to be setting up, and either they start to play out and then get sold into, or they just don't play out at all. They get burned through. Just like in a bull market, divergent highs, usually result in either a brief, relatively shallow pullback or no pullback at all. All right, and that's it. Those are your 11 sectors. So the takeaway is we are at support. We're exactly a little bit above where we started this morning. When I pointed out this isn't showing the pre-market trades, but we were right there. Yeah, there it is. So there it is. We closed the day a little bit above. So I'm still green by a bit on those pivots. Saved a little bit of give back on the shorts. And if we go down much, remember we're gonna if we continue to drop, these flags are going to continue to play out. You're going to take out the uptrend line on QQQ, and then you do have the next support levels below. You have a gap right here on QQQ, and you also have on the Nasdaq 100 futures that primary uptrend line, and then the S&P 500 futures. Let me zoom out a little bit here, show you what we had, and one reason I reversed today. We had pretty decent support here on ES. These are the S&P 500 futures. I've had this line here for a while. I had reaction high there. I had several reactions right here, and that's what we hit, and that's 40.13, and so that's the support level we hit. So glass half empty, meaning bearish. You got a beautiful little bear flag continuation pattern, and that's where it measures to. That's the glass half empty for the pessimist. Optimist, glass half full. You say we fell to support. We got very oversold on the 60-minute chart, and we held and bounced off this support, and we're going to bounce. And max bounce target right now be that 4100-ish, 40. It says 4109.50, somewhere in there. If we can carry on up, and then that also has a potential if that happens to foil these flags. That's the thing about these flags. They won't be symmetrical. They need to be proportional to the flagpole. So if we continue to go up like this isn't a bear flag anymore. It's just too big. So that's what I'm watching for. Pretty much bearish if we take out today's lows. If we just keep going down overnight into the evening, and then while that in itself is bearish, what wouldn't be bearish is if we reverse and then get back above there. You can have a little snapback rally, but if you drop down below there and then you start to reverse and you get anywhere close to the top of the flag, at that point, that's from my experience, that's usually when you're going to have a false whipsaw, false breakdown. If you get back up there, usually bear flags don't play out like that. They usually go straight down. So, if you're going to short it, you short it and you just set a stop somewhere up here in case that happens, and you let it run and shoot for those. Again, you can shoot for the measured targets, but on the S&P 500, wouldn't you have a lot of support right here? I would cover right there about 39.19, 39.20 or so, because that's good support, even though the measured target goes a little bit lower. But again, it's this plus what's on QQQ and what's happening on NQ at the time. The more support levels you fall to at any one time, the more likely on the different indexes and different sectors and key stocks, the more likely you are to have a reaction there. And then also, what do the charts look like? If we get another jog down, does it do this? like that. And then we'd have positive divergence if we make a marginal new low. See, there's a false breakdown type scenario. You fall down, flags start to play out, everyone gets bearish and starts shorting or adding to shorts, and then all of a sudden you reverse well shy of the measured target, and then you have positive divergence here on the futures, because that's what we don't have right now. I showed it to you on QQQ and some but not all of the sectors, but the futures are lacking that 60-minute divergence, and that's what's also giving me some pause right there. If we get another jog down and then reverse, almost a perfect tag. If we tag that primary uptrend line on NQ, that is a very, very possible scenario, and that's why, you know, said a minute ago I might not go down there. I'm going to have to assess this tonight, because let's measure it, because that's certainly a possible scenario. But even if I got out, I could always get back into longs then if we hit that trend line. I'm trying to measure it out for you and tell you. This morning it was 2%. I measured it for you before the video, but now we're a little bit higher. I don't want to move all these lines. There we go. It's only about about 1.5% from where we're at right now on the NQ futures if we hit that trend line. So, you could give it a little bit room if you did pivot and you are long. And if you're thinking about shorting and you haven't done it yet, well, you could certainly short, break right here. This flag, or at least that uptrend line, really hasn't broken on NQ. But if you short that, remember, there's just not a lot before you hit that uptrend line right there. So I'm not crazy about that, shorting there. You could do a half position, add it back, but all right, the levels to watch, and the main thing is just react, have a plan, and if you don't know what to do, stay out of the market. I'm still, as of now, leaning to us holding those support levels, bouncing from here, but I'm not married to it. So I will do an update most certainly in the morning. We'll see how things go. Until then, I just wanted to get these levels out to you to watch. This has been Randy Finney with Right Side of the Chart. Have a great day.